What's up, everyone? It's Hey John, and today I want to cover a few topics such as BlockFi, Solend, and of course Celsius. I want to give updates to all these topics here because they need to be discussed and a message needs to be delivered, and we have to see what's going on because this is setting a precedent in the markets, and we have to understand what's going on if we want to know where we can proceed in the future. And of course, as they always say, not your keys, not your crypto. I've been emphasizing this point multiple times and multiple occasions, and I will continue to say it more and more often because when you see these types of collapses like 3 Arrow, Celsius, etc., it reinforces the idea, not your keys, not your crypto. And most importantly, be your own central bank. And that means that you are the sole custodian of all of your assets and funds and your monetary future. And please make sure you guys go ahead and like, share, and subscribe because over 60% of you guys do not subscribe. And that is the best way for you guys to support the channel, and I appreciate you guys very much. Let's get to it. BlockFi secures a $250 million credit line from Bankman-Fried FTX. What is BlockFi? BlockFi is one of the platforms where you can use a credit card, and when you get rewards back in Bitcoin. And also you can stake your money in BlockFi and get back rewards. But now you're seeing BlockFi reaching out to FTX to get a loan, and you have to wonder why. It's because the program isn't sustainable. If you've seen a BlockFi's reward staking platform, you can see every few months they keep on lowering and lowering and lowering the rewards, thereby disincentivizing you to use your platform. And that causes a cascading effect because as people leave the platform because, well, the rewards are no longer generous, then that means the platform loses money and it continues to dwindle down. You're seeing things like this, loans here, loans there, 3 Arrow Capital falling apart, liquidations. Ladies and gentlemen, this is why you do not borrow and leverage on cryptocurrency or stocks. Because when you leverage on these risky assets, when you get a margin call, whoo, it's going to be a steep margin call. And if you ever missed a margin call, well, that feeling you get for being liquidated is literally the worst feeling you can think of. And only the folks who have been through it truly understand just how depressing it can be. CEL Celsius. Token soars as Celsius shareholder proposes recovery plan. Celsius pays compound. Celsius 7-day price chart. Wow, it is increasing dramatically from 75 cents to over 150. So we're seeing Celsius doing some positive moves here. They are paying back the DAI $100 million, and that's fantastic. That means that they are going from insolvency to solvency, or at least that's the idea and that's a plan here. With that being said, once they did that, well, we saw a short squeeze commence because people were fearful and they said, you know what, I am going to close off my short positions and get out while I still can, while the getting's good. So what you're seeing here is all those shorts literally chasing down a door. They're flowing through this little door and there's hundreds of shorts. They're all trying to get through it at the same time. And that's why you're seeing all this increased buy pressure because they are covering their shorts. And what does covering their short means? It basically means that they are buying back their positions because initially they borrowed some Celsius to short, and in order to close your position, you need to buy back those Celsius shares. But for the one thing about Celsius I still don't like is that they have not opened up their withdrawals, their swaps, or anything. It's still all frozen. So this is I would say, an unfair trade to the retail traders who are in Celsius at the moment because they are not able to do anything. They can see the price go up, but unless you have a margin account, you're just like, okay, cool. So I guess when Celsius opens up, the price will be back where it's at and it'll effectively do nothing for me. Fantastic. Great job, Celsius. That's usually what happens, but of course, I do not have a crystal ball, and I do anticipate that this will most likely happen because in a way, this is sort of trading behind closed doors. Crypto influencer wakes up with Celsius sweats. Well, that's a YouTuber, Ben Armstrong, aka BitBoy Crypto. He has said publicly that he has over $3 million in his ETH position with Celsius. So I can only imagine on how roiled his account is right now. It's literally, I would say, decimated. Because if you are unable to pay down your margin calls. And the only way to cover your margin call is to inject more liquidity, aka money, into Celsius. And with that being said, do you really feel comfortable injecting more money into Celsius after they block everything, withdrawals, swaps? If you put more money in there, it's literally going to be like the black hole. It's going to go in, but it never comes out. And then you're going to wonder what's going on. Of course, BitBoy Crypto and many other people who use Celsius, they're going to get very infuriated. And for BitBoy Crypto specifically, he uses reputation, he endorsed the product, he used the product, and now he's getting screwed by the product. So of course he's going to come out and, well, talk some talk, because that is what people do when they get upset. And of course, initially, BitBoy Crypto was supposed to lead a class action lawsuit, but most likely his lawyer said, you know what, you may not want to do a class action lawsuit, because if this company, Celsius, goes insolvent, that means that there's going to be very little money on the table. So if you go with a personal lawsuit, then most likely you'll be able to recover more money for yourself. Now, of course, this is all speculation on my end, but it makes sense in my eyes. Of course, I can be totally wrong. I'm not a lawyer. I'm just speculating on why you go from class action lawsuit to just a private lawsuit. And to me, that makes the most sense, because as I've said before, as companies, as stocks fall apart, it becomes a dog-eat-dog world, and it becomes who can go in first and get what you can first. Just like the stock market, when a company goes insolvent, who gets paid first? The bondholders, and then the lawsuits, etc., etc. In this case here, it's no different. This is all about who can get to the table first and who can extract the most out first. And I'm assuming that BitBoy Crypto, he will be able to leverage his YouTube platform and his private lawsuit in order to extract and get back as much money as he can, because we're also seeing talks of Celsius going bankrupt. And when you go bankrupt, that means you need to start setting money aside to distribute back to the shareholders, but in this case here, the people who use your platform. And for context of what I mean by bankruptcy, Celsius has hired some restructuring lawyers. So what this means is that when you file for bankruptcy, you'll be leaving all the debt with that lawsuit and that case. And that means that when you come out with a new structure in place and new assets in place, but none of the lingering debt, so you can rebuild and revamp yourself. And do not forget, folks, they have also hired Citigroup, Citibank, and they are very good at what they do. So all this points to bankruptcy and insolvency. And they are trying to minimize lawsuits, and they want to pay out the big players so they can resume business once they finish their bankruptcy case. Solend puts forward third proposal that will reduce borrow limit to USD $50 million. The Solend wealth situation is continuing to impose a heavy strain on Solend users. The latest proposal says users still can't withdraw USDC. Positions collateralized by USDC still can't be liquidated, and there's still systemic risk on Solend. Well, folks, that was a mouthful. So basically what they're trying to say here is that we want to reduce the borrowing limits because we don't want whales to be too risky, because when they're too risky and they own over 95% of the market, well, they fall, we fall. So we don't want to do that, folks. And this is what they're proposing to do. And you're saying, okay, guys, we knew that what we did was wrong and we should ask you guys first, and we shouldn't be doing any kind of shady votes. And this proposal is supposed to fix everything, supposedly. But what it really does is that it minimizes risk, which is fantastic, and that's what you want. And right now, Solend is doing damage control, and they're trying to make it out of this bear market intact in peace. Because on the next run-up, on the next bull market, well, you know, there will be tons of profits to be made. And they want to make sure they are still here to play. And right now, they are in crisis mode. They are in put out the fires. So hopefully everything works out for them. Make sure you guys like, share, and subscribe to the channel, because you'll be supporting it and I will be eternally thankful. I will catch you all on the next one. Shh.